You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is David Smith, Senior Analyst for the Morgan Report, which you can find online at silver-investor.com. Welcome to the show, David.
Good to be back, Jim.
David, right here off the top of the show, perhaps make a little correction. We were talking about silver and its use for coins in the U.S. Maybe you can update us on that.
Yeah, I'd like to make a kind of a little correction on that. What has happened is either the law has been repealed or it simply isn't paid attention to, but the U.S. Mint has options that it can do to use silver other than domestic silver. And the reality is, first of all, they will not have trouble getting the silver, and even if they did, it would cause the premiums of the American Silver Eagles to rise, but that wouldn't have any effect at all on the global demand for silver. And my feeling on this is that we have bigger fish to fry than to really worry about whether that is even an element, and it's not going to be important. The important thing is the global demand for silver in relationship to the supply. But I did want to correct that mistake that we made last week so that people have the right idea on that.
Trouble in the Middle East makes things interesting. The equity market's down at the time that we're talking. What should you do if you're looking at precious metals right now?
You know, Jim, I think right now, all things considered, the scenery is about as foggy as I can remember in recent memory. And the reason I say that is because we've had a 1-month rally in the metals, which have been doing pretty good, and the mining stocks, and they act like they want to move higher. But the thing is, there's so much going on in the world that is pulling prices in both directions. And so my feeling is, if a person has a position, they should be kind of sitting there quietly and watching. And if they don't have a position, after all the talking we've done about, to go in here and just start buying without consideration of what's going on is really pretty high risk. Personally, if some of the stocks that I follow drop quite a bit into support, I would add to them, but I'm not just going to go out and buy today because I want to see if I can influence the market. And I know people don't feel that way, but psychologically you kind of think, well, if I do some buying, maybe it'll move things, even though you know that you're not a big player or anything, but it's just the idea, if you're doing something, then maybe something will happen. And I think that that's a good way to really lose some money in this kind of a market where things are so unclear.
Yeah, they'll do something because, well, I don't know why. Maybe I should just do something.
Yeah, it's a matter of being active. And the very best traders, and I have to remind myself of this every day, but the really good, successful traders are people that don't move all the time. They sit there and wait for the price to come to them in a way that they feel really makes a lot of sense. And you know, it's a natural law, too. If you look at predator and prey in the wild, the predators aren't always making a lot of movement around. They're sitting there waiting until things really line up just right for them, and then they pounce, and they usually are successful. If they burn up more energy than they get by their efforts, then they're going to starve to death, and that's kind of the same way for investors. If you spend all your money on commissions and getting, wide bid-ask spreads and things like that and getting in and out of the market, you're going to get chewed up rather than if you move just a few times when it really seems to be in your favor.
People are watching oil prices like crazy because of trouble in the Middle East. You were just mentioning one incident that really had you sit up and take notice.
Well, the situation where the largest refinery in Syria was overrun a day or so ago by this new jihadist group. And then you look at the situation in Iraq. I mean, it's just unbelievable, and nobody can predict what's going to happen. The real tragedy that's going on in Israel with the abduction of the 3 Israeli youths and their murder, and then retaliation by some individuals in Israel, and the call-up of 40,000 reserves. So these things, we just don't know how it's going to impact the market. And I do think ultimately all this discord is going to cause more people to move into the precious metals. But the volatility is going to increase in both directions, and there's just so much that is so difficult to sort out right now. Just as an example, with last week's ruling in Canada, the Supreme Court of Canada ruling about the First Nations having right of first refusal, so to speak, about lands that they had hunted on previously in terms of operations taking place there in the resource sector, and no one knows how that's going to impact the current operations, let alone new ones. So when you throw all that in, it's just so much to let filter out a little bit, and I think being less active rather than more so really makes a lot of sense right now.
People are very nervous then, wondering what's next. Is there any way to predict, looking at the past, how this could break?
Well, I think you look at it in the terms of the standpoint that when there's a lot of concern in the world, that people do move towards safety, and sometimes safety means buying T-bills and going to cash if the Dow were to have a big drop, and sometimes it means going to the precious metals. And it's kind of interesting. I was reading a study just the other day about what happens when the Dow makes a large drop, and I think they profiled like 15 or 16 large drops over the years, and they found that in only 5 of those did they have a situation where metals fell in tandem. And of course, we remember 2008 when everything fell. And this kind of feels like 2008 again in some respects, because we're back into the same leveraged area that we did before. But the reality is that even if precious metals fall, they tend to rise more quickly than other assets in an extreme scenario like that. And I recall that in 2008 and into 2009, after that horrendous washout which took everything down and we were on the edge of a financial abyss globally, by the end of the year, gold was up 4%. That doesn't sound like much, but it was one of the few asset classes that ended the year up in relationship to other asset classes. So it certainly makes a lot of sense to continue along, I think, with the views that we've discussed in here over the last several years of having a representation of part of your assets in the resource sector.
We've heard some analysts predict the price of gold going up to $1,430, $1,470 this year. Any indication that'll happen right now?
Well, it's hard to say. It could happen overnight or it could take the rest of the year. But I do think that part of making the market prove itself is to have it move through some of these very important resistance levels, and that gives us more confidence that our analysis of the major term bottom is correct. And in the case of silver, it would be levels like $22 and $26. And for gold, it would be levels like $1,350, $1,400, $1,450, right up to $1,550. And if we were to get above and close above the areas where we had that big break about a year and a half ago, that would be a very powerful indicator that something really big is going on the upside. That would start to draw more people looking at the metals, and then, of course, a lot of the people would wait until you saw all new time highs, and that's when you end up with the intermediate stages of a public mania.
How is palladium doing?
Palladium is doing very well this morning. It's continuing to make new highs, and it's when I was looking just recently, it was the only one on the board that wasn't in the red. So again, I think it really behooves us to look at palladium as a lead indicator and see how it's doing. Copper has been very strong lately. A lot of the pundits that thought it was going to break below $3 and stay there turned out to not be correct at this point. It was up like 11 cents last week, which is a really large move. And whether that's hoarding on the part of users or whether that's increased economic activity, I'm sure it's a little bit of both. But we're just getting all these different signals, which really are hard to interpret, but they certainly portend, it seems to me, the upward bias of the precious metals so far is really well entrenched, and I think it's going to become more powerful as we move later into the year.
Do they have labor peace yet in the platinum development areas?
Well, currently, but it's I was doing an interview the other day for another news source, and my comment was that it's the end of the beginning rather than the beginning of the end in terms of of taking care of the labor issues in South Africa. I think this is going to be a recurring issue with more strikes and more incidents at these mining operations, and they're just not a very profitable operation in terms of what they could be and have been. And until they sort out the wage relationships with the workers and their ability of the companies to make a significant profit, there's going to be a lot of conflict there, and it's just going to keep on being a drag on precious PGM production. Is
there any alternative to the fields in South Africa?
Not really. Currently, there are several operations that are going on significantly in other parts of the world, but they're years away from development. And the one source in the primary source in North America was producing about 4% of the PGMs, and they're going to be able to sell virtually everything that they make going forward. In fact, this company is easy for people to find out, but they actually signed a 5-year contract with one of the largest acquirers of PGMs, where this entity would buy virtually everything that they produce. So it's going to be interesting to watch and see how their stock performs.
David, thanks a lot for chatting with us.
Been good speaking with you, Jim. Have a good day.
Thank you very much. My guest has been David Smith, Senior Analyst for the Morgan Report, which you can find online at silver-investor.com. You're listening to HowStreet.com Radio. Find us on Twitter at TalkDigitalNet. Comments about the show can be sent to info@HowStreet.com. I'm Jim Goddard.
Comments made on HowStreet.com Radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com Radio is a production of HowStreet Media Incorporated.